If someone had traveled back in time to 1995 and told you that one day the entire world would live, work, fall in love, make money, and argue on an invisible network, you probably would have laughed. And yet, that very year, in ordinary living rooms all across America, a strange sound began to echo. Static, long howls, a noise like metal being dragged across a telephone line. The internet was connecting. Slowly, painfully, but irresistibly fascinating. Every time you went online felt like a summoning ritual. Mom yelled because the phone line was tied up. Dad was convinced something was seriously wrong with the modem. And the kids sat there patiently just to download a blurry picture of a cat wearing sunglasses. 10 minutes, 20 minutes. No one complained. Because the feeling was unmistakable. You were touching the future. The internet made no sense. It was not fast, it was not friendly. It blinked and screamed, looking more like a haunted fax machine than humanity's next great invention. But none of that mattered. Everyone agreed on one thing. This was going to change everything. The pioneers showed up first. AOL brought the internet into people's homes. Yahoo tried to organize the chaos of the digital world. Netscape opened the door to what we called web browsing. Back then, the internet felt like the Wild West, except instead of cowboys, you had tech nerds in shorts, wearing socks with sandals, surviving on cold pizza and oversized dreams. You waited 5 minutes for a single image to load. But the thrill of being connected to the entire world made every second feel worth it. Even if you had no idea what you were doing, you were absolutely certain you were part of the next great revolution of humankind. And then, Wall Street caught the scent of opportunity. The moment investors heard the word online, venture capitalists' eyes lit up. The internet felt like unclaimed gold land, and everyone was terrified of being the last one to arrive. Money started pouring in. A lot of money. Anything with a .com at the end suddenly looked irresistible. What does this company do? We have an idea. What kind of idea? We are not totally sure yet, but it is going to change the world. Perfect. Here is $100 million. Suddenly, business no longer had to make sense. You did not need revenue. You did not need profit. The only thing that mattered was a story good enough to convince investors that you were building the future. A simple logo, a rough website, a founder who could smoothly repeat phrases like first mover advantage, disruption, and scale in every pitch meeting. And that was it. You were officially a tech startup with a sky-high valuation. The crazy examples started popping up everywhere. Pets.com sold pet food for less than the cost of shipping it. Webvan promised grocery delivery that was fast and precise, almost military level. eToy spent money as if tomorrow did not exist. And nobody worried. Stocks kept rising. The Nasdaq stock market kept soaring. If stock prices were going up, then the business model had to be right. That was the logic at the time. An initial public offering was no longer just a financial event. It became a full-blown celebration. The media went wild. Financial television shows talked about tech startups like preachers delivering sermons. Companies that had never made a profit were praised as saviors of the new economy. Super Bowl commercials were packed with names nobody had ever heard of. Some companies did not even have a real product yet. Just showing up on the screen was enough to feel real. The fever spread beyond Wall Street. Teenagers started trading stocks from their bedrooms. Relatives who had never cared about technology suddenly asked which internet stock they should buy. Everyone was getting rich on paper. Startup offices looked more like playgrounds than workplaces, with ping-pong tables, massage chairs, free food, and promises of an unlimited future. Nobody asked how the company actually made money. Revenue was considered old-fashioned. Profit was a concept from the previous century. The only goal was growth, no matter the cost. And at the center of it all was an almost religious belief. This time was different. The internet was not like anything before it. The old rules no longer applied. Money could be burned forever. Losses were just investments in the future. Any doubt was pushed aside. Because asking questions now meant excluding yourself from the biggest party in the history of technology. The internet really was going to change the world. That part was true. But by the late 1990s, very few people realized that they were not building the future. They were building a shared illusion, fueled by cheap money, blind optimism, and the fear of being left behind. And when a bubble is inflated by belief rather than reality, the question is not whether it will burst, but when. And then one day, the party began to show very small signs, strange ones. There was no loud explosion, no alarm bells. Just a few dot-com companies quietly missing the numbers they had promised themselves. At first, nobody cared. It was only one bad quarter. The internet was a long-term game. The future could not be judged by short-term financial reports. But then the old questions, the ones that had been dismissed as outdated, suddenly walked back into the boardroom with a much sharper tone. Wait a second. What is your actual revenue? How many paying customers do you really have? And in the end, when does this company become profitable? Those questions used to be laughed at. Now they were at the center of every conversation. Webvan, the company that once promised to revolutionize grocery shopping, was finally forced to admit a hard truth. The faster it delivered each order, the more money it lost. Pets.com, the marketing icon of an entire era, began publicly revealing losses with no bottom. The numbers could no longer be hidden behind slogans or Super Bowl commercials. The mood changed fast. Confidence turned into confusion. Confusion turned into doubt. And doubt, once it appeared, spread faster than any computer virus. On March 10, 2000, the Nasdaq Composite Index hit an all-time high of more than 5,000 points. Office chairs rolled back. Parties broke out. The media talked about a new era as if humanity had just crossed an evolutionary threshold. At that moment, the internet was not just the future. It was considered impossible to fail. And then, almost no one noticed the moment it started to fall. The market slipped slightly, just a little. Then a little more, till fear replaced excitement, and the exit door suddenly became too small for everyone at once. The sell-off hit. The Nasdaq collapsed, losing nearly 80% of its value in just 2 years. More than $1 trillion evaporated. This was not a correction. This was a full-scale crash. Dot-com companies disappeared so fast their names barely had time to fade from billboards. More than half shut down. Some were sold for pennies. The rest simply vanished from the internet, as if they had never existed. But the biggest shock was not the small companies. Amazon lost as much as 95% of its market value. Yahoo, once the front door of the entire internet, plunged relentlessly. eBay survived by a razor-thin margin, thanks to people trading strange items like Beanie Babies and old electronics. In a moment that was both funny and surreal, one of the most stable websites in Silicon Valley at the time turned out to be right. The damage spread far beyond Wall Street. Offices emptied out. Stock options that were once seen as lottery tickets became worthless. Engineers cleared their desks in silence. Foosball tables and massage chairs were abandoned like relics of a civilization that had just collapsed. Chief executives who once appeared on magazine covers now reappeared as cautionary tales. The media changed its tone just as fast as the market. What had once been called a revolution was now mocked as the dot-com craze. The internet was no longer the new electricity of humanity. It became a bubble, a collective mistake, a digital version of tulip mania. Venture capital froze. Startups were abandoned. Students switched majors. Within a few years, enrollment in computer science dropped sharply. Who still wanted to learn how to code when its future seemed to lead straight to unemployment? It was not just money that disappeared. An entire belief system collapsed with it. People did not only lose their jobs, they lost their sense of direction. The internet, once praised as humanity's destiny, was now seen as an expensive dead end. And it was precisely at the moment when almost the entire world turned its back on the internet that something very different began to happen. Quietly, silently, without headlines. But that was the most important part of the story. When the stage lights went out and the crowd left the auditorium, the internet did not disappear. It just became quieter. While most .com companies collapsed faster than anyone had imagined, a small handful did not. They did not make grand announcements. They did not hold press conferences. They did not try to prove that they still had a future. They simply kept working, as if no one had ever announced that the party was over. Amazon was the clearest example. In 2001, Wall Street had almost finished writing its obituary. The stock was in free fall. The press mocked the company with sarcastic nicknames. Investors walked away. Everything looked like the end. But Jeff Bezos did not change direction. He did not talk about reinventing the world. He talked about delivery. Amazon shut down unprofitable divisions, tightened costs, and focused the entire company on one very simple goal: getting products to customers faster, cheaper, and more reliably. No grand slogans, no flashy storytelling. Just warehouses, supply chains, and relentless execution. If a customer in Nebraska wanted a book by Thursday, Amazon would find a way to make it happen. Not through promises, but through systems. In another corner of Silicon Valley, Google was still just two Stanford graduate students working out of a garage. No hype, no public listing. Just one question repeated every single day: how do we make search results a little bit better? While other companies were busy trying to save their image, Sergey Brin and Larry Page quietly refined their algorithm. They had a side project called AdWords, created simply to keep the company running. No one expected it to become the foundation of modern digital advertising. Then there was eBay. While others burned money chasing scale, eBay focused on one thing only: connecting people to each other. From collectible coins to old fax machines, the platform was strange, simple, and durable. Most importantly, it made money. Something most .com companies never did. The difference between the survivors and the final victims slowly became obvious. The companies that stayed standing were not selling vague dreams. They solved real problems. They had real customers, real revenue, and operating models that could sustain themselves. They grew more slowly, but they grew on solid ground. And while the bubble vanished, a quiet legacy remained: infrastructure. Billions of dollars had been poured into fiber optic cables, servers, data centers, and a generation of skilled engineers. When companies disappeared, those things did not. Like Roman roads that outlived the empire itself, the skeleton of the internet remained, waiting for the next builders. A few years later, from that very foundation, a new generation emerged. Facebook began in a dorm room. YouTube was born in a garage. Twitter started as a side project no one was quite sure how to use. No grand launches, no bold declarations, just products and users. Then, in 2007, Steve Jobs stepped onto a stage and held up a rectangle of glass. The iPhone was not just a new device. It turned the internet from something you accessed into something you lived with. Always nearby, always connected, always present. From that moment on, the internet was no longer an industry. It became the backbone of modern life. The companies that survived became giants. The companies that failed became lessons. The internet had been overhyped, misunderstood, and pushed to the edge of collapse. But it did not die in the year 2000. It was simply rebooted. And this time, it did not need noise to change the world.